Hello, this is Jerry Powers, your loan saver consultant. This is the third video in a series where we're exploring the options available to homeowners who are in danger of losing their home through foreclosure. But first, let's quickly review the options that are available. So what's the best option for you? Is it foreclosure, deed in lieu of foreclosure, bankruptcy, selling your house, forbearance, refinance, short sale or short sale and leaseback, which we discussed on the last video, or loan modification, which I discussed on the first video. So today we're going to be discussing refinancing. So you may be asking, can I get my home refinanced even though I'm behind on payments? Well, unfortunately, in most cases the answer would be no. However, I said in most cases. There are a few exceptions to that rule. 1. If you have at least 50% equity in your home. 2. You're at least 2 years into a Chapter 13 bankruptcy payment plan, you've built a good credit score, and you've received court approval. Or 3. You're 2 years past a Chapter 7 bankruptcy discharge and you've built a good credit history and score in those 2 years. So I want to encourage you, if you can refinance, make sure that you shop around. Most people don't know that whenever you're shopping for a mortgage that you have 45 days to shop the mortgage, with typically only about a 2-point reduction in your credit score one time for as many mortgage inquiries as you desire. If you have a good amount of equity, banks may compete for your new refinance loan, so let the banks compete. However, if you don't meet any of the above requirements, the possibility of refinancing is slim. But first, let's look at the benefits of a refinance. It'll return you to a current status. It may lower your interest rate, depending on whenever you got your original mortgage. Switch you from an adjustable rate mortgage to a fixed rate, and can allow you to extend the loan term and maybe reduce your payment. So the downside to refinance: closing cost, payments could actually be higher, and there's not as many refinance programs available today. And back to the closing costs, those closing costs can sometimes be about 6% of the amount of the new loan. So think about it. If you don't meet one of the requirements, one of the qualifications for refinancing, then what lender would want to refinance someone who has recently showed a history of non-payment? Additionally, the interest rate would likely be higher, and therefore the payment would be higher. So I'll be discussing in a later video the option of bankruptcy. Briefly here, though, I will point out that a bankruptcy costs money for attorney's fees and will affect your credit adversely for at least 7 years. Additionally, the refinancing under bankruptcy is a very unlikely option if you miss payments. Lenders and the credit reporting bureaus place a huge negative mark on recent late payments, which therefore make it unlikely that a refinance would be possible. So I want to encourage you to stay tuned to this channel, because we'll be exploring more of your housing options in the days to come.